For fintech fans, embedded finance could be as big as cloud or mobile technology. For everyone else, it could be the biggest tech that we've never heard of, but that will impact all digital interactions. Shopify is using it to multiply its revenues, build moats, and empower its users. But is it an outlier that cannot be copied? Where is everyone else? And when VCs were telling us 5 years ago,
every company now should be thinking about how to leverage financial services.
Was it more hype than reality? To get the answers, I spoke to Lars Markull, who after 10 years in fintech infrastructure has dedicated himself to helping brands grab this embedded finance opportunity. And it looks like every company can become a fintech after all. Enjoy this conversation. I started with this Angela Strange from a 60 Cent statement. I think it's fair to say not every company has become a fintech. What's your view?
The publishing date of that article was January 2020. I left open banking in 2019, was looking then at new things to focus on. I remember quite well when I read Angela's piece. There's also another one from Matthew Harris from Bain Capital, who also around the same time speaks about embedded finance. It resonated with me a lot because in my past, open banking is clearly not embedded finance. But still in open banking, I've seen many companies trying to build financial products or integrate financial data. I always realized that very often the industry nerd, the person who knows a specific industry, is best positioned to offer financial services. There's a lot of complexity involved there. But that being said, the products itself very often are a bit more commodities, a bank account, a card, an insurance product. They're more or less pretty straightforward what they can do and how they work. Very often what creates value for the customer is putting them in context of what's happening outside. Because I think one thing we all can agree on when we think about our, for example, transactions on our bank account, every transaction connects to something in the real life, right, outside of the financial world. And I think brands, like non-financial brands, companies who are not fintechs, who basically interact with the customer on those moments already, can very often embed financial services very, very well. So for me, it was also the starting point. I think when I'm now looking back at now it's almost 5 years ago that this article was published. I hear a lot of people as well in the last couple of years who were arguing, is that really the case? Is that really the future where we're going to go? I think one thing we should be clear is the headline is, will every company be a fintech company? I don't think it's really defined what is a fintech company. Is it in terms of revenue? Does it mean you have to make a majority or even 75, 80% of your revenue to become a fintech? Does it have like small parts of it? I personally still agree that every company, or maybe almost every company, will be a fintech. I think the benefit is also making a prediction, making a forecast, not putting a timestamp towards it. It's very easy. So maybe I would be even comfortable to say, like, yes, I still agree every company will be a fintech company because we haven't defined fintech company. And I haven't said in what terms. Maybe it's 100, maybe it's 200 years.
Okay, if we put it on this hype cycle, where do you think we are now? Are we towards the plateau of productivity?
The question makes sense, but it's really hard to answer for two reasons. I obviously call myself an embedded finance advisor. I have this newsletter, podcast, event series under the brand Embedded Finance Review. I use the term embedded finance quite a bit, but embedded finance is so incredibly broad. I think we can all agree there has been embedded finance around since decades. The typical example of car financing at the dealership is embedded finance. When was it the first time? 70s, 80s. That became the more or less a new norm, right? So it's hard to answer your question with one specific statement. I think to look into what kind of financial product we are looking at, because finance means payment, banking, lending, investment, or insurance. You can use different hype cycles for them because some started earlier, some later. What is the industry? Some industries, because of the way they operate, are more inclined to explore embedded finance. For example, B2B industry, revolutionizing old school players with a software as a service solution, there tends to be embedded finance in these SaaS companies much faster than in other industries. I don't really have an answer like where I would put embedded finance as a whole. Some of them is maybe still a little bit to the left. Some are definitely embedded banking, embedded cards, embedded payment in industries where software as a service are very present. We're in the plateau of productivity. Others are still behind.
Now, this is a very good answer. This is what this podcast is about, to figure out the nuance behind the concept. Something that I discussed with a previous guest, Matt Ford. We discussed how concepts.
Analogies are a powerful tool. So VCs and entrepreneurs, the solution that you're either being pitched or pitching is incredibly complex. And often VCs have so many different businesses. having an analogy to anchor it to can be really helpful just to get you through that initial learning. And I suppose to draw that back into FinTech a bit more, the Angela Strange quote of everything is becoming FinTech, and the AWS for FinTech is what she often talks about as well from an embedded finance perspective. Again, it's a really helpful. Most entrepreneurs and VCs know what AWS is. They know that you can use AWS, pay as you go, super simple. You're not having to maintain any of that infrastructure yourself. So if you apply that similar approach, as opposed to FinTech, you quickly start to understand what those models are.
Concepts ignite interest. Be an operator and investor, dive deeper through products, for industry segments. We talked about what it is. Brands seamlessly integrate financial products to increase customer value. That's central. The examples come back all the time. Typically Shopify, they show significant revenue through embedded finance. Can we go deeper into that? Can you tell us about Shopify, what they're doing? That's so great.
Embedded finance is a term used widely. Sometimes companies want to call them embedded finance because they feel like it's a benefit of them calling them themselves that, even though it might not be really. My personal requirements are that it needs to be a non-financial brand, not a bank or a fintech who is really into finance. I would always argue a bank cannot embed finance because you're doing finance already. So it needs to be a non-financial brand, seamlessly integrated from a customer experience flow. It needs to be a logical choice to use a financial product. It needs to be new financial products, not open banking or open finance. The customer value stands out. Nobody needs another bank account, right? And the same applies to other financial products. Nobody needs just another one. You need the unique one that addresses your needs. Shopify is, in our industry in embedded finance, somehow a role model. They're public companies, so you can read a lot of the financial insights. You can see how much money they're making, growth, and more insights. Shopify provides API infrastructure for e-commerce shops. If you want to start selling small products on your own as a side hustle, you can use Shopify, but also very big brands use Shopify for their e-commerce store. E-commerce payment flows are close to that. They started with a payment product where they made it easier for the merchants to integrate payment products. After the payments product grew, they went into other financial products, lending, working capital financing for the merchants, a bank account, and potentially a lot more. So I think Shopify is one of the role models because they have shown over the years how it's done. But if I would stress one thing for anybody out there who might be on a similar journey, Shopify started with 2016 or maybe even before. But we only really called them an embedded finance or a fintech company in the COVID years, 2020, 2021. It's at least 5 years, maybe even more, that they invested into this journey. So it's not like any company who wants to become a fintech today just clicks on a button and tomorrow it's done. It's a journey, not an easy one. There's no playbook of do it like this and you will get the same result. Start with your customers, their problems, values, and go very deep there.
No, it makes perfect sense with the earlier definition. Shopify initially was a place to sell online. Now it's where you build your business. You need banking products. If I sell and a bank at the same place, that's convenient. I see the customer value. Thanks for clarifying. Shopify is a brand, digital native. If we take a coffee brand, Starbucks, right? I see all the coffee shops have some kind of loyalty program. What does Starbucks do different?
That's a very good question. I think Starbucks is a great example for embedded finance because everybody can relate to it. We clearly don't need to do the same for Starbucks. Starbucks has multiple products, including their own cards, where they provide additional features to customers. They started with this wallet. You can argue it's not hardcore embedded finance because they gave customers the potential to prepay their coffee. The frequent coffee buyer, you spend $5 on your coffee. Starbucks created this prepayment vehicle where a customer can pay $50 and redeem $5 as he or she goes and buys a coffee. The massive benefits for a company like Starbucks is that this increases retention. If you have already prepaid a certain amount, you're a lot less likely to go to the coffee place next door because you paid already. On the other hand, Starbucks is able to reduce their payment cost quite a bit. You have to pay a one-time fee for a $50 transaction, not 10 times $5. That's also a massive impact. The unique part is the money can only be used for Starbucks coffee. Starbucks can access the funds immediately. A bank couldn't do much because it's customer money. This already belongs to Starbucks. They can already use the funds to invest into new stores or other kind of things, which is unique. Starbucks is a great example because of the product they launched, specifically the cards. They built this loyalty machine where I think by now customers customers are paying or having more funds with Starbucks than with major banks in the US. And I think this example always stands out.
Yeah, it seems like such a no-brainer, but you mentioned it's not a plug-in, it's a journey. That could be the next phase of this interview. A lot of brands can think about it. It's not like, oh, I'm going to go for Synapse and solve the problem. Exaggerating. How do you approach it? How do you go for it as a brand?
Yeah, and again, I think it depends a lot what the industry you're in and the product and services you're selling. You have to be clear. There is a big difference if you are a B2C business versus a B2B business. Starbucks, of course, a B2C solution. Shopify, which we spoke before, more B2B focused, even though some of them might be also still consumers, but obviously it's a business. The starting point always needs to be customer pain points in creating customer value. If you're thinking my customer should get a new bank account or an investment account, that's probably wrong. You really have to think about how does it connect to your core business. That's really, really important. I think for somebody who is early in the journey, there's a lot of inspiration. That's one of the reasons I started my newsletter, to share company stories. If you are in your specific industry, in a specific silo, you might not even heard about embedded finance or thought about it, right? But if you see other companies, and it doesn't have to be your direct competitor, but a company who serves similar clients, even in other markets, not in your own home market, you can get a lot of inspiration through seeing what they offer and understand what they are trying to create as value for their customer. It's either you have a specific problem with your customer. There's an example of Shopify and other companies who early had challenges with their payment partners, has challenges with their banking partner. When they offered certain products, realized the experience is broken. It's better if we do it ourselves and bring it in-house. That can be a starting point where you want to solve a very concrete problem of your customers and you approach it with embedded finance. But it could also be that you're getting inspiration from somewhere and see this is something I can offer my clients. Also, the last couple of years, especially when funding slowed down, embedded finance is a great vehicle to increase revenue per customer. Companies look to extend the run rate, but obviously also look to increase their revenue. And obviously the easiest example is getting more customers. But if budgets are reduced, then this is a very hard challenge. Building new products, selling more products to your existing customer who you use already can be done with very little or no marketing cost at all. Obviously with other investments, those are then also members you have and staff, and you can explore to increase revenue per customer with embedded finance.
So what I retain is that it's a journey, a creative endeavor, inspiration. It's complex probably for companies of a certain size. Now I want to go one layer under and see who's powering that. You mentioned in your presentation, select your providers, like your life depends on it. Perhaps there was Synapse in the back of your mind when you wrote that. Can you the next step in the journey in terms of implementing it? And you need to have partners, right?
There are different ways of building financial product. And again, we're talking now embedded finance, which means at least 5 different financial products. If we finish the first stage, we identified a customer problem or found inspiration to build something. If you're non-financial brands, then test something, but the willingness to invest to build these things is limited. You might set a team on this to work with partners for a couple of months. If you build a lot of in-house with little external partners, it takes you a couple of years with very heavy investments. It's not what I would recommend. Try to launch a product in 6 months or shorter. Get customer feedback and iterate from there, right? Because very unlikely that with just theoretical interviews and activities, you will be able to build the perfect product, right? This might also take some time. So once you launch, it's not going to be like you switch it on and all the customers are going to jump on it, right? There's still a phase after that. Selecting the provider like your life depends on it. I think that's a very important step. I obviously had Synapse in the back of my head. Companies relied on one provider. The provider shut down, like in the case of Synapse, sometimes also pivoted or changed strategy and didn't support certain use cases anymore. Selecting the provider is a really important step. Don't try to select a provider and build the perfect product you envision 10 years from now. You need to do step 1, 2, 3, 4, 5 to get to step 10. Often the provider you have at the end is not the provider you start with. You always want to avoid changes. Think about which provider is feasible to get you to the next stage and prove certain theses that you have. Often driven by individuals at a company. That person very often has to convince leadership, or perhaps is part of leadership, but has to convince the rest of leadership that this is an irrelevant way. And obviously data and customer feedback is the best way to get there. So you need to be able to get that with your first product.
On FinTech and innovation, it shows some industry where you can move fast and break things. If you order a taxi and it doesn't come, it's annoying. In finance, it's different. When you go too fast, there's consequences. Finance synapses. One of them, that's what's great about FinTech. We can do a cast about it and discuss endlessly the nuance and the technicality. That also shows the importance of expertise, external consultant like yourself. I want to try to do a little fantasy FinTech where we don't have so many regulations and obstacles. If we were to try to get a company where we could build an embedded finance product, because of course, as you've suggested, we see the value for customers. Let's just say that Orama, my business, who is producing podcasts, and some podcasters generate revenues by sponsors, was integrating all that hypothetically. So I would connect them with sponsors. There would be payments. Creators pay for the podcast service. I could offset them with payments, or maybe I could pre-fund them because I know the sponsorships deals are coming through. Is that total fantasy, or is there some basis to it?
I love the term fantasy FinTech. Both of us and listeners can go through their daily life and think about what kind of brands they interact with, right? And if you were asking me, there's a reason Apple does financial services in different markets, because obviously there is a lot of people, including myself, who use a lot of these products, and you can seamlessly embed it, which is one of the requirements for being embedded finance. You can do really well if you have the hardware and the software. For me, it's always also a bit harder to make the embedded finance pitch on the B2C side. On B2B, it tends to be easier because by definition you have different money flows. You described your business and money flows at Orama. If you have a marketplace where you connect sponsors with podcast producers, you can do that simply in an MVP without embedded finance, and you just basically connect them and maybe even bill one of the parties for these additional services at that point of time. And this is the Shopify example and many other companies. Those companies who get to 50% plus of their revenue with financial services, they tend to always have a payment angle. That's basically the biggest opportunity in business for them. And obviously for you, this could be for somebody else as well, they realize, oh, there's already payment flowing, but they're not flowing through my company, they're flowing next to my company. Can I integrate with the payment service provider and make it natural part of the product? It makes it probably even more streamlined and efficient. And then the next step would also be, why just stop at payments, right? Why not offer a bank account, a card product, maybe all the other features, right? I'm guessing if you think about right now, Orama providing a bank account or a card, you might say this seems far-fetched. Start with the payment thing, where a person gets paid by Orama for sponsorship, not from the sponsors directly. Obviously, you can charge a so-called like premium on the payment fee, which maybe doesn't mean you directly charge the sponsor or creator. That can create a bit of magic on your business side as well if you do that really well. And then the next thing, another example, creators make money with a sponsorship. What do they do with the money? They should invest it. What about investment products? Have you thought about protecting yourself against any kind of, I don't know, claims? I'm not an insurance expert, but obviously there are a lot of things.
See it, Lars. Fix the payment first. With the payment, it's banking because there's payments two ways. They pay me, they receive payments. Investment products and insurance, their income is not secured. So it's totally fantasy, but hey, it gave me a lot of ideas. Thanks, it's a good game to play. You mentioned investing. It seems to be further out, payment, banking. Maybe. My previous guests include two embedded investing companies. One is Zero Ash, embedded crypto transaction. Embedded crypto brokerage. One is Drive Wealth, embedded stock trading. And to be fair, some conversation got me excited. Roundups, like in your bank, that invest in a crypto thing, fractional shares or whatever, an index and stuff like that. Those things got me excited. From what I see, mainly offer brokerage, mostly financial companies. Do you think there's still this opportunity in embedded investing, or is it a marginal use case?
I think it's a bit early to answer that question. Embedded finance consists of payment, lending, banking, insurance, and investment. Investment is the hardest to see outside a bank because investment is so much. This is basically what you do for retirement planning, for other kind of activities. So this is not so easy to connect. You have examples in Europe as doing infrastructure brokers, they tend to focus more on fintechs and financial institutions because a lot of the infrastructure is still broken. There's room to innovate. I see a place where embedded investment products are in non-financial journeys. We have to think about it. What is a product? What is a feature? If it's just a roundup, I want that feature in the banking app. I'm using definition of embedded finance or embedded investment. It needs to be a new financial product, maybe a new brokerage investment account. The best place brands is at the intersection of employer and employee. And for HR tools, newer players that have been growing quite massively in the last couple of years are now Personio, Factorial, here from Germany and Spain. I see them also getting more towards the employee, not so much being in the background, but also the employee as a dashboard can log in, change the bank account for the salary and so on. When you start a new job, you go through this HR survey where you ask a lot of questions because the employer needs to know. This can also be supporting the employee, right? You want to discuss your retirement savings as well.
And the pension conversation comes naturally, right?
I think especially at this, because when else are you going to think about money in a non-financial area, right? There are a couple of other ones as well. I heard some use cases in very specific industries, but for me, employer-employees intersection is very interesting.
Fantastic. Lars, this has been enlightening about embedded finance. From what you said, including embedded investing, it's not impossible. I agree with your assessment. It's happening. It will take time. It probably has a lot of steps, a lot of things to uncover. I'm grateful for a clear view on this. Do you have a suggestion for next?
Yeah, for sure. If you want to dive deeper into the embedded investment space, look at specific examples. You had a podcast episode with DriveWells. There are a couple of European providers as well in Germany. A company called Lemon Markets, who's exploring some of these very well. The founder, Max Linden, is an interesting person to speak to. And there's an earlier stage startup called Naro. Founder is Chris Pullen. The flexibility for new investment products. If you want to design your ETF, they can help set this up in a lean and efficient way. They have great partnerships. Those two people are really interesting ones for investment in general, but they also tend to look at embedded investment.
Is this related? I know a company in the UK that brings to mind Wealth Kernel.
Wealth Kernel and Seckle, British providers. Wealth Kernel is now a license in Spain for the European Union. In Germany, we have Lemon Markets, as mentioned, but also Upvest is another company. So I think the space is, there are a couple of players there, and most of the business comes from financial institutions and fintechs because there's still so much broken and so much opportunity. It's not just the embedded investment space. I think if you were just focusing on embedded investment as such a provider, I think you have a hard time getting to your next round because there are not so many cases out there.
It's a journey. Lars, we know you for Embedded Finance Review. How do people get in touch?
I'm fairly active on LinkedIn, so you can find my name there. EmbeddedFinanceReview.com, my newsletter, podcast, event series. The slide deck can be accessed on the website as well.
It's a fascinating area, and Lars, keep providing answers. I've learned so much and keep learning. I will put all the links in the description below. Thank you so much, Lars, for your time.
Thank you for having me. I keep learning from everybody who's embedded finance. It's good to have people sharing their stories and knowledge. I'm trying to amplify that. Not everything I produce is from my own experience. It's amplifying what other people have achieved and built because it provides information and resources for those earlier. Thanks for having me and the discussion. Looking forward to seeing your embedded finance product launched at Orano.
One day. We don't put a date, just like you did.